Hey everyone, Longacres Finance here, and today we will be taking a closer look at Lockheed Martin Corporation, ticker symbol LMT. The company has been on my high-yield dividend watch list for the past few months, and I believe it is a fantastic dividend stock to own. It is very important to understand the business you intend to invest money into, so today I'll give you a thorough look at Lockheed Martin, and you can decide for yourself if the company fits your investing objectives. Let's start with who they are and what they do. Lockheed Martin is an industrial stock, and more specifically a global defense contractor with 4 business segments. The largest segment in terms of sales is aeronautics, which accounted for about 40% of total sales in 2020. This segment primarily focuses on developing military fighter planes and helicopters. The second business segment is rotary and mission systems, which accounted for about 25% of total sales in 2020. This segment features over 1,000 unique programs that span helicopter, integrated air and missile defense, littoral warfare, undersea warfare, radar, electronic warfare, cyber solutions, C4ISR, and training and logistics systems. The third segment is space, which accounted for a little over 18% of total sales in 2020. This segment features space launch, commercial and government satellites, and strategic missile lines of business. And the last segment is missile and fire control, which accounted for a little over 17% of total sales in 2020. The company designs, develops, and manufactures precision aerospace and defense systems for the United States and allied militaries. Lockheed Martin is the product of a merger of Lockheed Corporation and Martin Marietta on March 15, 1995. They were the second and third biggest defense contractors at the time, behind Northrop Grumman, and it made sense for the two companies to merge and become a bigger competitor in their field. During the merger, several segments were left out of the new corporation, and formed a new company called L3 Communications, which has since changed its name to L3 Technologies and trades under the ticker symbol LHX. Additionally, a few years later, the materials company was spun off from Lockheed Martin into a separate company named Martin Marietta Materials. That company trades under the ticker symbol MLM. There have been more spin-offs and acquisitions since the 90s, and they are all listed on the company's website. If you're interested about that part of the company's history, I'll leave a link in the description below. If you're enjoying the video, please like and subscribe to the channel. Now let's move on to the financial review. Lockheed Martin has grown to be one of the largest defense contractors in the world, with total sales of $65.4 billion in 2020. This was a 9% increase in sales over 2019, and the company projects to top this figure in 2021, with projected sales of $67 to $68.5 billion. Sales grew for each of the 4 segments of the company, with aeronautics and missile and fire control seeing the fastest growth. Earnings per share from continuing operations increased by 12%, with total earnings per share of $24.50 in 2020. The company has a long history of growing backlogged orders. They have seen an increase during the past 5 years, and 2020 was no exception. The backlog increased from $144 billion to $147 billion. Lockheed returned a total of $3.864 billion to shareholders in 2020, $2.764 billion in the form of dividend payments, and an additional $1.1 billion in share buybacks. This equates to about 60% of total free cash flow, leaving ample cash on hand for future R&D and any other initiatives the company has planned. Lockheed raised its projection for future cash from operations during the Q4 2020 earnings review. They were projecting the 2021 cash from operations at $8.1 billion, and now have raised their estimates to $8.3 billion. Similarly, the 2022 outlook has increased from $8.2 billion to $8.7 billion. And the newly released 2023 outlook sees the figure climb to $9 billion. It's always a good sign to see that the company is projecting growth in the future. From the 2020 annual report, we can see that 74% of sales come directly from the US government, where Lockheed was either the prime contractor or subcontractor. 25% of sales came from international customers, with the remaining 1% being US commercial and other customers. Lockheed's revenue and growth are primarily tied to the US government. So as long as the Department of Defense keeps spending money on our various military branches, Lockheed will remain prosperous. The defense budget in the United States is the largest in the world, and I think it will remain so in the future. If Lockheed can remain a leader in their industry, and I think they can, they will continue to secure favorable contracts from the government. On December 20th, 2020, Lockheed entered into an agreement to acquire Aerojet Rocketdyne Holdings, and the deal is expected to be finalized in the second half of 2021. Aerojet Rocketdyne is an aerospace and defense leader, providing propulsion and energetics to various customers. This merger will further expand Lockheed's product offerings and market share. The deal still hasn't been finalized and therefore could fall apart. However, Lockheed is optimistic it will be able to successfully complete this acquisition. Some of the risk factors for Lockheed are its dependency on the US government and the F-35 program. Any changes to laws and regulations Lockheed must adhere to, these are entirely controlled by the US government. The ability of the company to control costs as future cash flow may fluctuate based on a mix of contracts they land. Lockheed must also continue to develop new technologies and stay ahead of its competitors. They do this through internal research and development, as well as through acquisitions like the Aerojet acquisition I mentioned earlier. International sales pose unique political and regulatory risk should US relations change with any foreign nation that is a customer of Lockheed. There are a few more risks mentioned in the annual report, and I'll leave a link in the description below in case anyone wants to read all 132 pages. During the last 10 years, revenue for the most part has increased. You can see in 2013 and in 2014 there was a slight dip in revenue, but things quickly picked up. Operating income has grown consistently each year with the exception of 2015, that remained flat versus 2014. Earnings per share have grown nicely, more than tripling over the past decade. In 2017, the company did have quite a small EPS figure. However, that was related to a one-time larger than normal tax expense and did not have an impact on future earnings. The 3-year earnings per share growth rate stands at almost 53%. However, that is heavily skewed due to the low earnings figure in 2017. The 5-year EPS growth rate paints a better picture of recent growth, as we can see that growth clocks in just shy of 16% per year, which is an excellent growth rate for a mature company. Looking at future earnings estimates made by analysts, we can see that they are projecting slower than historical growth of 7% this year, 6% next year, and less than 5% in 2023. If we use these earnings assumptions and Lockheed's trailing 5-year PE ratio of 14.61, this would suggest that the stock is overvalued at the moment. The fair price for the stock at the end of 2020 was $356, and the fair price in 2021 is $384. The stock currently trades for around $392, which is slightly higher than the estimated 2021 fair value. This, of course, is just one estimate of fair value. Please keep in mind that these valuations are only assumptions. Lockheed has a very strong history of dividend growth that has been slowing down during the past decade, but is still in very respectable territory. The 3 and 5-year average growth rates are both around 9.5%. Analysts estimate the trend of the dividend growth to keep slowing down in the future, with an estimated 8.67% growth rate in 2021, a 7.89% dividend growth rate in 2022, and a 7.92% growth rate in 2023. In my opinion, these would be decent growth rates for Lockheed to achieve. If we take a look at the trailing dividend yield for Lockheed, we can see that the stock offered much more attractive yields earlier in the decade, with yields above 4% in 2012 and 2013. The average dividend yield has been trending downward each year as the share price has experienced solid capital appreciation. The 10-year average dividend yield is 3.01, and the 5-year average dividend yield is 2.42%. If we can assume Lockheed can trade around this 5-year average dividend yield in the near-term future, a fair price for the stock in 2021, based on its estimated dividend and 5-year average yield, is $440. In 2022, the fair price will be $475 and $512 in 2023. These fair prices would result in capital appreciation of 12.27% in 2021, 21.12% cumulative capital appreciation in 2022, and 30.71% in 2023. On top of these capital gains, investors would of course enjoy the 2.5% dividend yield the stock currently pays, as well as a decent yield on cost growth. As the dividend growth has remained consistent, the payout ratio for the company has been declining and hovers around 40% right now. This implies that the company has been growing quicker than its dividend stream, and therefore should easily be able to continue to grow its dividend well into the future. Based on Lockheed's trailing dividend yield, the fair price estimate using dividend yield theory is around $416 today, which is above the actual price of about $392. Using a simplified dividend discount model, the expected rate of return for the stock going forward is 12.34%, and if investors expect to receive a 10% growth rate per year, they could purchase shares of Lockheed up to $401 per share to achieve this growth. A 10% annual growth rate is a good target for me, but your target annual growth rate may differ. CFRA estimates the fair value of the stock to be $335 right now, which is significantly lower than my estimates. Morningstar, on the other hand, comes in at $433, which is the highest estimate, although this is from the latest report I have access to from January 2021 and may be a little outdated. All four estimates average out to $396, which would imply that the stock is fairly valued and may actually be slightly undervalued. CFRA's valuation is a bit puzzling, seeing how they have a 12-month target price for Lockheed of $504, which would imply about 28.5% growth this year. Yahoo reports a target price of $418 from the various analyst sources, which would imply a 6.6% growth rate this year. I know I've thrown a lot of estimates at you, which could be overwhelming. In my opinion, the stock is fairly priced and should offer double-digit total growth in the near future. I think it'll continue to pay a solid, growing dividend stream and is an excellent industrial option to add to your portfolio. I own and have recently added shares of the stock to my portfolio, and I will continue to do so in the future. For deep value investors, adding shares with a dividend yield above 3% is the ideal entry point. However, you may have to wait a long time for the yield to revert back to that long-term 10-year average. Let's take a look at the stock's historical performance to wrap things up. I will look all the way back to March of 1995, the year of the merger that resulted in the Lockheed Martin we know today. March of 1995 to March of 2021 gives us 26 years of historical returns. The stock has a compounded annual growth rate of 13.78% over this time period. This would grow a $10,000 investment into almost $290,000 today. And look at that juicy growing dividend stream. The first year yielded $222 in dividend income, while in 2020 investors would have received $7,507. That is an incredible 75% yield on cost on the original $10,000 investment. Alternatively, if you invested $325 each month into Lockheed Martin since March of 1995, your position would be worth slightly over $1 million today, and you would have achieved a 36.45% compounded annualized growth rate. Your position would also pay just shy of $28,000 in dividend income in 2020. Investing $325 per month is very doable for most people. That equates to $75 per week, and over that 26-year period, it would have been slightly more than $100,000 invested. This shows you how powerful compounding growth is, and the biggest factor is the time you allow for your investments to compound. Let me know in the comments below if you like Lockheed Martin, and if you currently have shares of it in your portfolio. That's it guys, thank you for watching. I really appreciate your support, especially those of you that watched the video all the way through. It really helps my channel. See you next time.